Welcome to M&G Investments podcast Dream Machine with me, Alex Matcham, and my colleague Laura Brown.
Hello.
Each episode, we're going to speak to one of our investment professionals to try to get to know the people behind the portfolios.
That's right. We're going to be asking our investment expert to choose from our virtual vending machine their favourite drink, crisps, and chocolate bar or sweets, as well as a few other questions to try and get to know them just a little bit better.
Looking for excellent crisp-adjusted returns.
We should say at this point this is not a promotion for any of the items discussed. There is a whole world of snacks out there.
That's right. None of the content of Dream Machine should be considered as financial advice, nor should it be considered nutritional advice. If anyone is unsure, they should speak to a financial advisor or a nutritionist.
So, with the disclaimers well and truly done, let's begin. This episode we're joined by Stefan Isaacs. Stefan joined M&G in 2001 as a graduate and is head of macro credit. He runs a range of portfolios across European and high yield. And Stefan, welcome to Dream Machine.
Thanks for having me, guys.
Stefan, I assume you've been able to watch the previous series of this, or maybe one or two?
Yeah, I watched a couple, yeah.
So my question
subscriber.
is, have you done your due diligence?
Absolutely, of course, never come unprepared.
Excellent. I'm very excited about this one.
It's what
really
you'd expect from
Yeah.
fixed income managers is to
Indeed.
know what they're getting into. I mean, maybe, Stefan, you mentioned sort of you joined M&G in 2001. You maybe just talk about kind of how you came into the industry and your sort of reasons.
So having done my due diligence and listened to a few of the former podcasts, I could see that people had this sort of long trodden plan that they were going to get into markets, and they knew exactly what they're going to do from the age of 2. I kind of left uni, went traveling, had no idea really what I wanted to do, thought I'm reasonably comfortable with numbers, came back in March, realized I'd missed out on all of the recruitment rounds for the following year, and noticed that M&G had a job available in London, and I thought, well, that sounds like fun. Interviewed for it, got the job, and joined the performance team as a graduate, not having any idea, frankly, what M&G did or a great deal about finance, full stop at that point.
So there was never a sort of predetermined kind of view that investments was just happened to be, and then it grew from there in terms of your interest there.
I feel like I'm supposed to be able to give you this
I
great
just want to know what you
spiel
said
about
in the interview when they asked you, why do you want this job? You're like, oh, I don't know.
Yeah, they were probably desperate. But no, I didn't have a grand plan. In fact, to be honest, at the time, I really don't think I felt like I knew. Like, growing up in Liverpool, the city was a distant thing. I don't think I knew much about it at all.
And those initial roles, talk to us about a few of the things that you did initially in that performance team, and then it moved towards fund management.
So I started with the performance team. It's actually, in hindsight, quite a good place to start, because you're working with the fund managers across both fixed income and equities, and trying to understand the drivers of returns and so on. And so you get quite a good exposure, I would say, to those individuals, their markets, etc. But I realized quite quickly that I wanted to be where the action was. So then it was kind of like, well, how am I going to move into the investment space? And quite quickly there was an opportunity to move across to one of the fund management assistant roles within fixed income. Can't say I knew really what a bond was back then. Spent some time doing that before a role came up on the trading desk, and that was the fun part. That was when you really got involved, and you're working sort of side by side as we still do with the traders, and it kind of it went from there. And
you in terms of then, as you move the latter part of your M&G career, so you started running portfolios, as Laura mentioned, a range of different areas, including high yield. I think of high yield as the racier part of the fixed income world. Did that attract you? To that part of the kind of asset class in terms of the sort of dynamics in particular in that space?
So I guess when I first joined the trading desk, we were very much, we're going all the way back, like best part of 20 years. We were very much sterling investment grade focus, and that was the bulk of our business. And so I was kind of quite fortunate that I was able to pick up the other stuff effectively, whether it was whether it was European investment grade, whether it was high yield, whether it was, credit default swaps, everything that effectively wasn't sterling investment grade. And that, that's where the growth was going to come over the next, 10 plus years. So I had some great exposure and kind of an opportunity to just try and make that my own. And then, as you say, so I in a couple of years later started running. I joined what was Jim Levis's Bond Vigilantes team. It was a really small team at the time. It was myself, Jim, Richard Wallner, I think Mike Riddell. That was essentially it. And we were still very focused on investment grade credit, but realised that there was more to it, and we probably needed to upskill and do more in high yield, do more outside the UK, etc. So it was a great growth opportunity, and I think we've all. It's something that the Wooly will talk about as well. We've all upskilled on the job. That's why it is such a great job, because it's always evolving and always changing. And we, had a chance to grow as individuals and learn as we do it. And having worked with some fantastic fund managers, I would say one of the things we talk about a lot is the willingness to be a contrarian, to sort of, I hate the phrase, think outside the box.
I mean, I think what we saw thinking outside the box, your snack selection has definitely been, we had no repeats, which is always really pleasing. So maybe we kick off.
It's an excellent segue.
Thank you.
Into
quite professional now.
Your drink.
So Stefan, can you talk us through your drink of choice?
I mean, the nostalgia is going through the roof with this.
It's also a massive carton.
So, I mean, to be fair, I didn't even know you could buy it in a carton. I remember this stuff as a kid coming in these little, small cartons that used to, get presented to you at probably more meals than my mum would want to own up to, given the sugar content of this stuff. But I used to love Umbongo, and I remember I remember the advertising campaign that anyone my age probably grew up hearing, and it used to taste. At least I remember it tasting absolutely brilliant. So it's kind of it's for me a trip down memory lane. I'm a bit concerned that it's not going to taste anything like what it used to. Not least because in my head things have changed, but also because I think that you just can't put that much sugar in a kid's drink anymore.
I do remember it being that kind of thin though.
Yeah.
Oh no, I see. I thought it was thicker and
really? No, I think it
and sort of dark. I was an Umbongo fiend.
But did you pour it, or were you just drinking the little cartons
the cartons.
as well?
Out the cartons.
Yeah, out the cartons. Yeah. I'm going.
You're going for it.
Yeah. Yeah. It needs about 6 teaspoons of sugar.
Oh, yeah, it's not as
it's not
the same.
pleasant in the way that it used to be. It smells.
I still think my kids would appreciate this.
Yeah.
It's probably going to appeal more than the water that they get.
And
I think it's a good choice. It's a shame that it doesn't taste the same as back in the day.
No.
I wonder if there's a sort of a secondary market for old Umbongo.
I don't know. It might be quite old now.
That's probably true, but
Mightn't it?
Yeah, I'm not sure there's a
nostalgia is
vintage
no bad
Umbongo.
thing.
but an excellent choice. The even just seeing that takes me back 30 odd years.
Ditto. Yeah.
Was that
thanks,
like a
guys.
school packed lunch?
Yeah, I think it was, and as I say, also served at home as well.
Excellent.
Well, I'm sure my mum would deny it.
And we won't test. We won't check. We don't have to do the compliance checks on that.
Good.
That's all right.
So, Steph, you've kind of grown up, I think, in one of the leading Bond teams in the world. You mentioned there being an original kind of member of Bond Vigilantes. What's your kind of reflections on how that shaped you as an investor, and indeed you've helped shape that team and the sort of some of the key distinguishing features of the approach, the investment approach?
So I guess we tried to do a couple of things. One is obviously generate some decent returns for clients, and the other thing is I think we've tried to be really transparent in what we've done. And credit to Jim for the blog and also the organization, I guess, for taking the risk around the blog, because when we did it, it wasn't something that you saw across the industry. And I think clients have really appreciated that transparency, the sort of communication from the investors without the sort of marketing that you traditionally associate with a large asset manager. So that's been part of it. And then I think, also I mentioned before, trying to be a contrarian. It is a really, really hard thing to do. I mean, it goes against, everything you sort of, I think evolution has promoted in you, which is to have this herd mentality, to go with your peers. And I think, we've been quite good at over time taking a different view, and have been supported by, various people through the organization in that, because, if you are running with a herd, you are going to get the same outcomes as the herd. I mean, just, it stands to reason. So you have to do something different to get better outcomes, or at least different outcomes. You hopefully get better outcomes. So I'd say, those two things, the transparency and also the willingness to stand out, have probably been hallmarks of what we've been trying to do over the last 20 plus years.
And do you think that's particularly pronounced now with passive and the growth of passive investing? That being, I guess, the sort of the alternative to passive, right?
Yeah, I mean, it has to be. I mean, we have to be judged on what we deliver, but I think that's absolutely key to it. And again, the transparency thing is also helping clients understand how we're thinking and how we've arrived at these outcomes. It's not just, we turn up one day and think, oh, let's just do something different for the sake of it. There is some thought that has gone into that. And
it strikes me that in one of the areas you look at, high yield, a passive approach would be a pretty tough thing to take, right?
Yeah.
If heavily indebted, high yielding issuers, you're taking on potentially a lot more default risk.
Yeah, I mean, it's a really, really fun part of the market, but there is a lot that can go wrong. As you rightly say, you by definition you're dealing with businesses that are either in structural decline or businesses that have actively chosen to take on more leverage, and either of those, certainly if you combine the two, can cause some real problems. So there's definitely the opportunity to differentiate yourself from a sort of passive outcome, and even the passives struggle to deliver a sort of index-like return, because there are huge challenges in creating a passive high yield fund as it is. But I think there's real opportunity to do something.
It sounds like an area
different.
that can remain active for a long time, which is good.
Yeah.
So.
I think we should move on to your favourite crisps, please, Stefan, if you could tell us what you've chosen.
Well, again, another trip down memory lane for me. So Space Raiders. So we used to sneak off to the Five Ways, which was the big roundabout about, I don't know, 500 meters from my school, and they used to sell these retailed at 10 pence a pack, and now I can see they're advertising them at 50p, and that's impressive. So they're trading 5x where they used to trade. Yeah, exactly. But again, used to love the taste of them. I haven't tried these in quite a long time, so pretty keen to do so.
Yeah, let's do it. Look at little faces. I don't know, I remember them. That feels familiar to me.
Yeah.
Great.
That is great.
Yeah.
Again, it's nostalgia.
It is.
Because there weren't many crisps that were 10p a packet, and I remember when they were 10p.
That was their USP.
Oh, these are really good.
Does that take you back to that garage?
It does. Yeah, absolutely does. And the chippy next door.
And it's a great packet as well, because that stayed the course, that design pretty much there or thereabouts.
Don't fix
So
it.
that,
I'm quite pleased. Often you pick up these packs of crisps these days, and there's maybe a third of the pack whereas this is
it's
pretty
quite well filled.
substantial,
Exactly. And you weren't tempted by the beef flavour. Do you remember they used to have beef flavour?
Was it?
Yeah.
No.
I was always picking
Always. I mean, you're either beef or pickled onion, aren't you? That's a thing in
That
life.
should be a big question that we
Exactly.
ask. Pickled
I have
onion
to
or
try and not
beef.
eat these through the rest of the podcast.
Yeah, exactly.
Right, you do like this.
Yeah.
That's what they're there for. And do you are you a snacker in your day-to-day kind of life, or?
So I'm pretty good in the office. I won't snack in the office. The problem I have is when I get home, if I manage to make it home before bedtime, there'll typically be lots of kids' food that's been left over. And at that point in time, I'm hungry and ready for dinner. So I'll eat the kids' food before then eating my dinner. So that's when my snacking is typically towards the end of the day, which is probably the worst time to be snacking as well.
And do you have a particular routine from a work point of view that you use to sort of get away from the office or think about, decision making, which isn't kids' dinner?
It's not been mentioned doesn't mean it doesn't work.
Yeah,
that's a good question. I think I spend a lot of time in the office, or if I'm working from home, fixed on Bloomberg, talking to colleagues. And I think a lot of the investment thinking is done there. Do try and carve out some time at the weekend for a bit of reading.
And how do you, one thing that I find interesting is obviously with fund management, it's one of those things where your performance is sort of visible all the time. It creates. And you talked about conviction, and that often means being contrarian, and often that can mean some quite challenging positions where you're not with the. How do you sort of manage that sort of emotional part of the job?
That's a really good question, and I think everyone's going to give you a different answer. I suspect everyone's going to give you a different answer. I think you have to care about what you do, and I care deeply about what I do. You have to accept that sometimes you will get stuff wrong. Otherwise, you will never, you will never try and do something different. You'll never try and be that contrarian that we talked about. Yeah. What is difficult is staying the course. I think when the market is sort of testing your thesis, and this sort of idea that that the market can test you for longer than you can remain solvent is definitely there in the back of your mind. I think you just have to have the emotional intelligence. You hopefully have to work in the right sort of organization and with the right people around you to support you. And if you believe in what you've done, you've got to stay the course.
And that's interesting because I think there's often a perception of fixed income managers being, or people being, like half glass full or more cynical, because you're kind of, and I suppose even with high yield, right, you're thinking about the downside. That doesn't sound like it's necessarily true, right? Whilst you would think about that, it sounds like a more measured view around, how you look at investments generally.
Yeah, I mean, you've got this starting point, I guess, traditionally with fixed income, where you think you've got an asymmetry that you don't have in equities, right? This idea that if you're lending someone £100, your worst case is you don't get anything back. In your best case is you get your interest and you get your £100 back. Yeah. Whereas, with equities, there's potentially more symmetry involved, right? You could lose all your money, but equally your money could go to the moon.
Yeah, 5 times.
Yeah, exactly. It could be 10. So there is that initial thought process, and you do have to be mindful of the risk rewards. So there are times where we think assets are expensive, and we're not going to reach for yield in that environment. But there are definitely times where you think, actually, this asset class or part of the fixed income asset class is really cheap, and I've just got to be aggressive here. I've got to, within the confines of the mandate that I'm running, I've got to strap on some risk because I think I'm being rewarded for it. So it's not always the glass half empty, but but there are plenty of times where you've got to swing for you got to swing the bat.
Should we go to our final snacks? This is your chocolate bar or sweets.
This is very exciting. This
is good. Talk us through your selection. Yeah. Weighty.
Oh, look at that.
So again, along the nostalgia theme, I used to remember going to, after school, we would stop in from time to time at this shop that is definitely not there anymore, called McNaughton's, little local corner shop. And at the back, they had the pick and mix. And I remember at the time, actually, and now I'm definitely showing my age, there was still some that you could buy for a half-penny. And I believe 1984 is when they finally got rid of the half-penny. So much to my upset, everything doubled in price overnight, basically. So whatever I was allowed to spend 10p or whatever suddenly didn't stretch very far.
I was going to say on the inflation theme, these you probably don't get penny sweets anymore now, do you?
No,
it's
probably 5p again.
Yeah, I'd love to know
remote
what a bag like
possibility.
this costs.
This feels like quite an, expensive.
Yeah.
This would be the one that if you go to the cinema and you'd be like, the kids are like loading
Yeah.
up, you're like, whoa, steady on.
Calm down. Yeah.
Steady
and then,
on.
this would be about £9
Yeah.
in the cinema.
Good though.
That is good. Isn't
I
it?
like the variety in a sweet selection.
Do you have any particular sweet that you remember eating?
Those flying saucers. Do you
Flying
remember them?
saucers, yeah.
Remember those ones?
They're good
Those
from a
were
weight
great.
perspective.
Yeah.
Very nice.
I feel like haven't really come up with very healthy options, have I?
Well,
But
it's the dream machine, so
Yeah.
it kind of
Yeah.
doesn't matter.
yeah, you're right.
You talked about the evolution of markets, the fixed income market. What do you see changing in terms of issuance, in terms of what the scope of opportunity is going to be for you and the team over the next 5-10 years?
Oh, that's a great question. So I think we're going through, a really interesting time in fixed income where we're seeing, to some extent, some of the changes that the equity market had seen over the last couple of decades playing out. So in terms of price discovery, in terms of the way that you'll trade the market, I think we're seeing the sort of the equitification of the fixed income markets, which I think is going to create some changes. I think that the debate between public and private assets is also a very live one as well. Where's that line? So you've now got, traditionally, private lending was done, in a genuinely private space and was done, I suppose, typically by, levered smaller businesses, your mid caps. But now you're seeing, the same companies, the Mag 7, for example, borrowing from the public markets as well as the private markets. So I think that as that evolves, that's going to raise some very sort of interesting questions and challenges and opportunities. And then I think the market's increasingly becoming global as well. So as I said, when I started off, we were very sort of UK centric in the way that we invested, and clients, even clients here in the UK, now want us to be a lot more sort of global in terms of looking at the opportunity set. And I think that's the obvious path as well. And there's some really interesting stuff going on. If you look at what's been going on in Japan, for example, with bond yields moving, significantly in the last sort of 6-12 months there, for investors to be able to take a view on that kind of stuff, I think presents some really good opportunities as well. So yeah, more global and more transparent, and probably more opportunities.
So I think that all that remains is for me to replay your dream machine, Stefan Isaacs. So we have as your dream drink Umbungo in a carton, but the 80s version, not the up to date. You want the real syrupy sugary version like that. And then for your crisp pickled onion space raiders from the Five Ways roundabout garage, take you right back there with your backpack on. And I think they taste probably quite similar to back there.
They do.
And then did you say McNaughton's?
Very good.
Yeah, McNaughton's estate agent at the back.
News agent,
sorry, not estate agent. A news agent.
Yeah, they might be an estate agent now.
Could it be?
Yeah,
probably.
Could well be.
Yeah.
Probably. Are, yeah.
News agent where the half-penny mix that is now probably 5p for a bag of pick and mix. Excellent choices.
Brilliant. Really good choice.
Thanks, guys.
Thanks
Really
very
enjoyed
much.
that.
Thanks very much.
Thanks.